How much does this significant sell-off over the last 10 days, over the last month or so, worry you?
It's really worrisome. Tencent certainly has a hand in just about everything going on in China, from chat to e-commerce, mobility, you name it, AI. So for us, looking at where they are investing, the types of industries that are tied to the WeChat platform, and they're starting to see declining user numbers, losing that to other companies like Toutiao. I think it's an overall worrisome trend, at least in the short term here in China.
This is a company that's trying to reorganize, Ben. It has been perhaps focusing a little bit more in different areas of the business, trying to diversify, particularly as we see regulatory hurdles being thrown at them by China, and particularly when it targets gaming, which is a big cash cow for the company. Are they making the right maneuvers to be able to support their profitability going forward?
I think they are. So, a couple of the key restructuring items. The first was this new platform and content group. We kind of termed that the anti-Toutiao group. That's essentially them trying to unify their chat, short-form video, media, news, things like that are being eaten away by this new entrant into the market. The cloud computing division, or the cloud kind of services division, is a clear attempt to really try to counterbalance the impressive moves that Alibaba has made in that space. Their cloud computing at Tencent doubled in revenues in Q2, so that seems to be going in the right direction. And then this new push into kind of industrial and enterprise, smart industries, is really the largest and newest push. And this is to kind of unify traditional industries with a lot of the AI, big data, core components that that Tencent has always offered in its normal industries, kind of next generational industries, but now bringing them to traditional industries. I think that's a really critical component of this restructure.
So, Ben, do you think the restructure will inherently work? Does it make it more of a buying opportunity?
I'm bullish on Tencent, especially at these kind of prices. I mean, they've been trying to do very modest share buybacks, less than 0.2% of the total shares outstanding. They've got their lowest PE multiple, 25x or so, over the last almost 5-6 years now. It's really low today as an overall share price, but they've got a lot of gems still in their basket. They've got a lot of great investments in companies like Pinduoduo, Meituan, global groups in the ride-sharing, entertainment, and now even in financial services spaces. And now they're just starting to grow into other capacities. Their battle with Tencent rages on in the fintech space. They're bringing their platform to existing traditional industries like retail with their investments into Wanda Commercial. So I think that today's price is not representative of where this company can go.
But looking at today's prices, when I'm looking at the Bloomberg, it's trading at 27 times future earnings, 27 times current earnings. That is still more expensive than Facebook. That's still more expensive on a multiple basis than Alibaba. Why wouldn't you just go into Alibaba, indeed, if it seems like a cheaper stock?
Alibaba is still far less of a diversified platform today than Tencent. Still, Alibaba very much retail and then ancillary streams around that, so payments, logistics, and other services. Tencent have a hugely diversified portfolio that spans gaming, entertainment, transportation, the omni-channel and omnipresent network of WeChat, which is essentially the main port of call for China's 800 or so million internet users. And so, as a diversified platform, I think today it's still difficult to compare it on a strictly kind of PE ratio perspective against a Tencent, against a Facebook or an Alibaba. Particularly Facebook, I think, which is really dependent today still on advertisements, and has actually shown to be, I think, a lot less innovative than Tencent. Tencent has been great, really, about reinventing itself, not being afraid of cannibalizing digitalizing its own business and investing into sectors where it doesn't necessarily have existing synergies today, but where the platform can grow and expand and potentially rescue the business should certain elements of it, even things like gaming, start to reduce in terms of their overall contributions to revenue.
Ben, a lot of this erosion in value has been spurred on by concerns about the regulatory implications of China. How much is that tainting technology as a sector over in the country?
You know, we've had a difficult period over the last months. Certainly, there's a high incidence of internet addiction. The Chinese government reports about 23 million internet addicts. We also have, had instances of, predatory peer-to-peer lending platforms. There's a lot of work that the Chinese government needs to do today to continue to regulate these rapidly advancing and rapidly changing industries that would be difficult for any government to keep up with from a regulatory perspective. So I think we'll continue to see a lot of involvement from the government in a lot of these new and emerging industries. Yeah. They've benefited historically from being under-regulated, and so I think it will be a trend that will continue.